Hi everybody, Thomas at Rebel Income here. Coming out of the holiday season, early reports indicate the consumer spending was healthier than many analysts expected. That's given some experts a reason to take a more bullish stance to start the new year. That's been a positive thing for a lot of stocks in the consumer discretionary sector, which includes retail stores like the stock I'm covering today, Kohl's Corporation. Kohl's has struggled over the last few years to stay relevant in an economic environment that has increasingly favored e-commerce and strayed away from traditional brick and mortar stores. Management's response is to embrace an omni-channel approach that expands its brick and mortar footprint while also being strongly focused on digital marketing and e-commerce through the Kohl's app. Those efforts have begun to pay off and have even helped the company reverse some negative trends in its fundamental metrics that extended into the early part of 2023. Is it all enough to make the stock a smart bargain-based buy for 2024? Let's find out. On a long-term basis, Kohl's has been following a pretty strong downward trend. However, over the last couple of months, the stock has picked up quite a lot of bullish momentum, which we can see with the 20-day moving average that has been moving strongly up as well. That has prompted the 200-day moving average, which I use to reflect the long-term trend for a stock, to actually begin to bend back upwards, which could also be a positive indication. Over the last few days, the stock has been pulling back a little bit off of a high at around $29 per share. And that's pushed the stock below the 20-day moving average and could have some short-term traders and technicians worried about the stock's near-term direction. However, within the context of the upward trend that started back in October, this also looks like it could be a pretty good opportunity to buy the dip, with expected support being pretty close to the stock's current price, just a little bit below $26 per share. That's supported by the fact that in the last day, the stock started to stabilize. It halted the strongly bearish momentum of the last couple of days. That's indicated by what's known as a spinning top candlestick, which looks something like this, with the stock's open and close price activity located in the middle of its longer wick. That's an indicator that the stock could be starting to stabilize, finding a new support point, and getting ready to build a new base of bullish momentum, which could be a very encouraging thing from a timing standpoint if you're a bullish-oriented investor. Of course, as always, the real question that I want to answer is whether or not that price action is enough, along with the stock's fundamental metrics, to make me want to take the stock seriously as a value-based opportunity. So let's go ahead and let's take a look at those fundamentals. Kohl's free cash flow is a strongly bullish indicator right now, not only because of the free cash flow yield, which is just a little bit under 17% right now, but also in the fact that it reversed a negative pattern over the last 6 months. A year ago, free cash flow was negative $501 million. And then reversed and has gone higher in each of the last 3 quarters to the current level as of the most recent earnings report at $525 million. The turn from negative free cash flow into positive free cash flow, and a change of a little over $1 billion in that time, is a pretty strong indicator that the company's fundamentals are on pretty solid footing. There are a couple of counters to that picture. Cash and liquid assets, for example, are fairly limited at $190 million. That's actually lower over the past 9 months from 286, even though it is a little bit higher from the market a year ago at 153. I'm more interested in this downward pattern in cash. This suggests the company may not have a lot of liquidity and is relying on its cash flow and net income in order to service its debts, which currently stand at about $4.3 billion. All indications so far are that debt is serviceable. However, if we look at the company's net income profile, there are some concerns. Over the last 12 months, the company has spent more money than they made. We can see that net income was a little under a negative 1% over the last 12 months. That's a pattern that, like free cash flow, has also reversed in a positive fashion to a little under 1.5% in the last quarter. However, even with that positive turn, profit margins are very narrow for Kohl's right now, suggesting that unless this pattern continues to strengthen, the ability to service debt could become a concern. Altogether, that mixed bag of fundamental metrics that we've just looked at justify in my mind the fact that the stock doesn't really represent a useful value opportunity right now, with only about 1% upside from its current price at about $26.50 per share. At the same time, it's also worth noting that there is a useful value price for the stock at just a little bit above $21 per share. More interesting element here is Kohl's dividend, which at its current price represents a dividend yield of about 7.57%. Is that attractive enough to offset the lack of a value proposition and some of the mixed fundamentals that we're seeing? That's an individual decision. Speaking for myself, this would be something that would make me want to put Kohl's back in my watch list and probably come back to it in another quarter. What if you are interested in trying to take advantage of that dividend, or you're possibly considering Kohl's for a short-term kind of a trade? Let's go back to our charts for a moment and let's talk about reward to risk. As I already mentioned, Kohl's has been coming off of a peak just a little bit above $29. I'm going to go ahead and call that $29.50. In the meantime, the stock appears that it could even be starting to bounce off of current support at about $26 per share. The big question, if I'm trying to think about reward to risk, first of all, is how much downside could there be from $26 if that support point doesn't hold? Where should it find next support? The 200-day moving average is sitting at around $23.50, and considering the way that that is starting to trend upward, I'm going to go ahead and call that secondary support. It gives us about $2.50 of room if the stock does break below $26 before it should find next support, with about $3.50 up to the stock's most likely immediate resistance at $29.50. So that gives us the first look at reward to risk that we should think about. With about $3.50 of upside against $2.50 of downside, we're actually quite a bit below the 2-to-1 minimum ratio that you should be looking for if you're thinking about using Kohl's for a very, very short-term trade. What about on a longer-term basis? What if the stock breaks above $29.50? The stock's last major pivot high above $29.50 looks like it occurred in early 2023, and that's a really ugly line, I apologize. But it looks like that is somewhere around $34.50. That means that if the stock does break above $29.50, there's about $5 of upside in that case, with $29.50 expected to act as new support. So if you see a break above $29.50 and act quickly, you've got a reward to risk ratio of about 5-to-1 to work with, which would be a very, very interesting technical setup on a longer term basis. All told, however, if you're thinking about using Kohl's as a value-based opportunity, my conclusion would be that the stock is a sucker's bat. Well, what do you think about Kohl's? Is this a stock that you'd consider as a useful long-term buying opportunity? Maybe your analysis is different from mine. Does the stock's attractive dividend make the value proposition less important? Go ahead and leave your thoughts in the comments area. Let's have a great discussion and get everybody's viewpoints. If you like this video, please go ahead and subscribe to my channel by clicking on the link shown right here. You can also learn more about my Rebel Income system by checking out the video shown right here. If you'd like to sign up for my Rebel Income reports, trading alerts, or toolbox, click the link to my Patreon page that's in the description area for this video. Thanks again. I'm Thomas. I'll talk to you again soon.